Okay, let's look at a stock that has some green charts. Let's get started off on the right foot, okay? So this is Google, which is listed as Alphabet Class A. Once you click on it in Robinhood or in Yahoo Finance, these charts that I'm showing you right here are actually screen captures from a Robinhood, which is a brokerage trading application and brokerage house that I got these screen captures from. So highlighted on top is the 5-year. This is the 5-year chart, 1 year, and the 3-month chart. And again, as soon as I am interested in a stock, I just immediately go on my app on Yahoo Finance or usually Robinhood and just look at the 5-year, 1 year, and 3-month chart. If all of those aren't green, I just kick it to the side. I don't pay attention to it anymore because there are so many other stocks that do have this to focus on. So I like to focus on the good stuff and forget the rest, okay? So Google is a great example of a stock that has 3 impressive charts. The 5-year chart is green and shows a 190% return. And I'm sure when we see this, we all wish we had bought it 5 years ago because we have a 200% return almost. And that's exactly the kind of thing that I look for in stocks that I buy. I want something like a 200% return in 5 years. In fact, if it doesn't have a 200% return, I'm probably going to search more for stocks that do. Like I have a few stocks that don't have a 200% return. Maybe they have a 100% return, but it would be really difficult for me to settle for a 5-year chart that did not have a 100% gain in 5 years because I do want my money to double in 5 years. And if that stock has done it in the past because of its institutional involvement, it has more of a chance for it to happen in the future, in my mind, okay? And this is just from me trading from a long period in time and noticing these trends and that this is the way that it goes. So I watch these stocks all the time and I see what they do, and this is what this stock likes to do. It likes to go up over time, okay? The 1-year chart, 62% gain, impressive. So one of the reasons that the stock had a 62% gain is because we were coming off of in 2022, there was this amazing sell-off in the market. It was not a pleasant time because of the war in Russia and inflation numbers and us coming out of this COVID environment. And everyone was sort of predicting there would be a recession. The recession never came. In 2023, that was quite clear, is that these situations were becoming more under control. The war was becoming a little bit more normalized, sadly. The inflation started to be looking like it was being controlled better by higher interest rates. And things just started to look better. It started to seem like it was less likely for a recession to happen. So the stock market rebounded. And it was very interesting to watch this because the institutions, when they came back into the market with all this cash that they had taken out during 2022, because they didn't want to see their values lose too much during that little crash situation that happened in 2022, is they started investing in only the best stocks. Only the best stocks when they came back in. And the stocks that have a 62% gain in the last year or 100% or 200% gain in the last year, those are the best stocks on the market right now. And the institutions decided that, not me. I just noticed it, okay? So I just noticed it, they did it. And so again, I just follow what they do. That is my rule of thumb. I'm just I want to be with the cool kids and I want to be with the people that know what they're doing, and I just follow what they do. The 1-month chart shows a 17% gain. That actually surprised me when I saw it. I was like, wow, that's pretty good. But do you know why? Do you know why? This is super interesting and sort of ties my whole thesis together on why I invest in certain stocks. It is because during the last earning call at Google, they announced that they are now going to pay a dividend for the first time ever. And the institutions loved it. And bam, the stock went up. So if that doesn't really prove to me that my thesis works, I don't know what does, because this happens all the time when a stock announces a dividend or an increased dividend, the stock soars. So this is just a rule of the market. This is just what happens. So again, I just know what happens and I just partake in what happens and set myself up to take advantage of what happens. So this is an example of one of the stocks charts that's kind of one of the best on the market. There are probably 30 to 40 stocks that I know of just off the top of my head that have charts that are similar to this or are in the same range or maybe a little bit better than. And then the rest of the stocks don't look as good as this. So once you figure out what those are, it's really easy, for me, it's really easy to make a decision as to which stocks I want to be in. I want to be in the stocks that have done this and that are doing this because it proves to me they have like top talent that works there, they have top products, and they're innovating. And the institutions want to be a part of it, and therefore I want to be a part of it as well. So here, we're looking at the 5-year chart showing that 190% return. If you look here, this stock was probably trading at about 160 or 155 before this huge market pullback in 2022 where it sank down. And then what we're seeing from this bottom part, about 3/4 of the way across the chart, is the retracement pattern. This is when institutions decided to jump back in and push the stock back up to all-time highs. That happened probably about a month and a half ago. So really interesting to look at this. The 1 year shows a solid rise at 62% almost. This is a beautiful chart. There's no reason I don't want to be in this stock when I look at this. This is great. And then this 3-month chart is spectacular. Like if you had been in, just started investing 3 months ago and gotten an 18% return, I don't know who wouldn't be thrilled with that. I would be thrilled with it myself. Okay, so now we're going to move on to another chart system here and just show you Robinhood or Hood. This is a really popular stock to trade with on X, and like I do not know why. And I'm going to tell you why I don't know why. I mean, I do know why, but I'm going to tell you why it's a bad idea in my mind and why I would never get into a stock like this. Okay, never, like never. The first thing is that the 5-year chart shows that this stock opened here at this peak, and then ever since it's lost value and it hasn't ever recovered. In like 2.5 years, it's never gone back to its original price. So that is not a good sign. Like this should scare me as an investor. I should be like, why would I want to do that? Like, why would I want to put my money in a company that isn't worth what it said it was worth the day that it came out? Like that's not smart to me. So I wouldn't do that. Okay. So it's declined in value. And for me, this is just a huge red flag. The second thing that's a big red flag for me is that this company isn't even 5 years old yet. And you're like, no, innovation, it's going to be new. It's going to be like the new trading platform. I actually love trading on Robinhood, but I don't want to invest in it because they haven't showed me that they have a way of making money. Their like earnings and revenue must not be that good or consistent, because if they were, the institutions would notice and they'd start buying this, and they're not. So I guarantee you, if you go search right now, the earnings and revenue on Robinhood, you're going to find some problems. And the charts are just showing you that. Interesting, huh? Okay, the 1-year chart shows the stock rising, but this is just like a zooming in of this section here, which isn't, the stock has not retraced to its original IPO price. So I remain unimpressed by this, okay? And I know you could say to yourself, but what if I had gotten in a year ago and I had 100% return? I'd say, well, like, good for you. You put your money at risk and you did okay. But why not be in Google? Didn't that have more? I don't know. It had a 60% return, but it was in a safer place because the institutions loved that stock. That's what I would say to that. Okay. Here you took a significant risk. You got to pay off, but that's like not what investing is. Investing is about making solid choices that then increase in value over time rather than like bad choices that hopefully pay off, because this could have gone bad for you just as well as it could have gone well. And that's not something that I want to do with my money. I want to put my money in companies that are really showing me they know what they're doing. They're innovating and making products and services that are blowing away all the other competition in the market. And that isn't what Hood is doing. I can tell you that from firsthand experience, even talking with traders that I know. They may have captured sort of like a younger generation of traders, but all of the big traders and the people that have millions and millions of dollars, they're kind of sticking away from Hood and are going with more traditional brokerages like Fidelity and Schwab and things like that. The 3-month chart here is rising, but again, it has like a really long time to go before Hood retraces to this original all-time high. And I wish I had that price for you to let you know what it was. Let me look it up real fast on my other screen here and tell you where we had started out when we IPO'd with Robinhood. And it won't be a pretty picture. So it started at 35, it spiked to 50, and now it's worth 18. So there are just better places for me to put my money. Also, when I put this in the metric of, is this more than $100 a share, somewhere in that range? No. Does it pay a dividend? No, it does not. So let's zoom in on these. Again, anything that is less than 5 years old, it's a new company. They have a lot of kinks to work out. They haven't shown themselves to be profitable yet. That is why you're seeing the sinking share price. 1 year it's retracing, but it's got a long way to go back to that 30-something it IPO'd at. It's got to double in price, which that when we think about doubling in price, that's not like it has to rise 100% or something like that. It's crazy how much it has to rise for it to go back up to where it IPO'd at. Okay, so now we're going to go on to a stock that has 2 red charts. So this is another really popular one on FinTwit. Again, why? Like, why is it? It's some people believe that this has better products and services than other banks. The people of the world don't agree because they're not moving over to SoFi. Like, I think it's a hope and a dream that they will. But really, what people are so excited about with SoFi on FinTwit is that they can buy a lot of shares, and they value having a lot of shares in a company over buying like the best companies, which makes zero sense from an investing standpoint. But I talk to a lot of traders just in my business, and I find that like so many of them value the idea of having 2,000 shares in something versus 100 shares in something. And it's a silly, silly mistake that they're making. And it's one that's almost hard to correct with people because they value quantity over quality. I value quality always over quantity. Always. It's just what I do, okay? So SoFi has a lot of potential risks for us because it has 2 bad charts. The 5-year, again, young company. It's like 3.5 years old that it IPO'd. There's just not a lot here. It's declined in value, okay? So when people say that I just think this company has a new way of looking at money, I go, okay, yeah, sure, maybe they do, but they don't really have like a whole stack of cash that they could like compete with a Chase Bank. Chase Bank and JP Morgan can just turn around and say, hey, you see SoFi's business model? Why don't we just adapt some of those things, steal their whole thing on like how they give you financial advice and investing advice. I think that's one of the things, or financial planning, I believe, is one of the things that they offer free to their investors. But do you realize how easy it is for Chase to just turn around and offer those services with the amount of cash they have on hand and offer those same services as SoFi and then just blow SoFi out of the water? It's so easy for them, and it's amazing to me that people don't realize that and realize the weakness they're putting their money in. It's not good, guys. Okay, 1 year. 1 year chart is up, but we're just dancing around in the same range as well. So this is something that I look for. It's like up, but like it's not going up. Like it went up here at the beginning, at the first eighth of this chart, but then it's just danced around in a range, and like that is like, for me, I wouldn't want to have my money parked in a place where it's just going bobbing up and down in a range all year. No, I want that going up. And it went up like somewhat in the first eighth of this year. But since then, it's done nothing but bubble around like, I don't know, like a wave. So it's like not what I want. And then the 3-month chart, we never want to get into a stock that has a downward 3-month chart. So even if you see the up chart, the first 5-year chart and the 1 year chart going up, and then the 3-month chart is going down, some people might say to themselves, ooh, I can get this great stock on sale now. I would caution you to wait until all of those stocks are charts are green to get involved with it. I know that you guys think that then you're going to be buying a stock at an all-time high, but a lowering 3-month chart shows you the pattern that institutions are leaving that stock, and there's the beginnings of a problem. You don't want that, because it could continue to go lower. So that's like your early alert system that, hey, something might be going on here that's not great. Perhaps I should put my money in something that's better. So here we have a zoom in on the 5-year. Again, this is too young of a company. That's a red flag. I tried to figure out a stock I could show you guys that had a declining chart that was on 5-year, that had longer than a 5-year history, because there are plenty of them on the market. But just keep in mind, like, I'm not saying that just because a stock is young that that's a reason not to get involved if the 5-year chart is going down. If it's a really established old company like Ford Motor, for example, and the 5 years going down, again, really bad idea to get involved with that stock. 1 year is up, but again, bobbling around in a range, and this is just frustrating. This is frustrating as somebody who's invested or trading in it. It's not where I want to be. And then downwards 3-month chart. So the note here to yourself is anytime that you see a stock chart going down over 3 months, even if the first 5-year and 1-year chart are good, that this can be like the first step down, and it would be cause to not get invested in that stock. Okay, and then we picked another one that everyone is that has like a huge cult following. And yeah, I don't like this stock. I don't like this stock only because the charts are bad. So that's why I don't like it. And so people are always like, why don't you like this? And I'm like, because like the institutions are leaving it. They don't believe in it anymore. I'm not so sure it should even be in the Mag 7 anymore, because it's not magnificent what it's doing as a company. I mean, as far as the earnings and revenue go and where the stock is headed, it's not really headed in a great place. Can they turn it around? Maybe, potentially. I actually think maybe long term they could. But they need to make some changes, and they haven't done any changes yet. So I'm waiting for those changes. If these charts all start to look good and are rising, I will change my mind about this. I am not somebody who's going to stick my heels down, grind them into the ground, and say, like, I would never, just because the stock was bad 10 years ago. My mind can be changed because the data can change. And if the institutions have changed their mind, I will change mine. So we have to be flexible. You have to be so flexible with investing to just follow the data and not have like a really strong conviction based on you liking like a CEO or liking a certain product because you drive that car and you decided it's the best car. Well, everybody else has to decide that too. Okay? That's the way it goes. That's the way it goes with investing. So a lot of people argue like, oh my gosh, but Tesla's chart is up 975% on the 5-year chart. Yeah, it is. Like back then they were innovating in huge ways. They were the first company to really make an electric car on a mass scale, and a lot of people bought into those, and like a lot of people bought those cars and really drove the share price up. They were seen as the leader in that. Since then though, there are a lot of other cars that have made EVs that have different offerings than what Tesla does. So all those other companies are taking a bite out of the market share that Tesla used to own. They don't own it anymore. They want to think they own it, but they don't. There are other cars that you can buy that are EVs or that are hybrids that like meet other people's expectations of what they want in a car, right? Because everybody has different needs and wants. So I don't know. So 5-year, if you had invested 5 years ago, would you still be happy? Sure. Would you wish you had also sold up at one of these high points? You would. You would feel that way. Do you know how many people bought at these high points? I'll tell you, I did. I bought because I was like thinking, okay, these charts look good, because they did look good back then. And so I bought this, and I've lost money on Tesla because no investor is perfect, and because when the chart for the 3 months started going down, I didn't sell because I wasn't really worried about it. And then it was 6 months down, and I was like, I'm not really worried about it. And I've learned my lessons there. All right. I've learned my lessons. I lost 50% of my investment on Tesla. It was $6,000. It went down to $3,000. And I'm actually doing a YouTube video that you guys can see of me trying to trade back on NVIDIA to make back those losses that I had on Tesla. Different story, but you can check it out. So the 1-year chart, there's a yo-yoing here again. I mean, if we look at the beginning, it's up 3.2%. If we look at the end. So like, what are we seeing here? We're seeing that the stock rose in 1 year, but then went down. So it rose on the first eighth of the chart, bobbled up and down, but now the trend is sort of looking like it's going down. Even though this chart on the 1 year is showing that there's a 3% gain, looking a little deeper, we can see that the pattern is actually falling off. Then we go to the 3-month chart and it's down. And the trend is down. And everybody that's in Tesla knows that the trend is down. And everyone that's talking about it online knows it, and all the investors know it. So the stock has to come up with some great news or sales or innovation to bring, the money back into the stock. That is just the way that this is going to go. The institutions aren't in love with it for many reasons. Their earnings and revenue haven't been where they need to be, and the innovation, they need to come up with something new and not talk about coming up with something new, but actually deliver something new that investors can get excited about. Okay, so here's those charts, a closer view. And I think that wraps up our whole 5-year, 3-year, and 5-year, 1 year, and 3-month chart evaluation.